Still bearish sentiment on the NSE 20. And although foreigners have been the main drivers of the market and still are, their interest seems to be waning a little bit. Why is that?
Well, so far, perhaps you could argue maybe the volatility of the shilling is weighing in on them. However, I think Kenya at this point is at a crossroads. I think Professor Ndongo has done a good job in defending the shilling. Now, what needs to be, but I think that's just a third of what ought to have been done to complete the job. And I think at this point, having pursued, the central bank having pursued a contractionary monetary policy, fiscal policy needs to follow suit. And therefore, we hope to see a little bit more, perhaps, liberalization, just to give the private sector breathing room, maybe a bit of austerity so that to avoid crowding out the private sector, and perhaps even see a little bit of more liberalization, so that entrepreneurs can be able to fill in the space where the government has stepped out.
All right. Besides borrowing on the part of the government is the question of borrowing on the part of consumers. And we're told that 4 major banks and many more to follow have started raising their base lending rates. What do you read into that? Because we've seen the CBR rate going to 8%. We're anticipating a lot more monetary tightening, and how that is going to just have a bearing on the credit flow in general in Kenya.
Well, that's classic financial markets dynamics, where if you anticipate interest rate rises, you want to protect yourself early. So that is perhaps what they're doing, because when there's low funds for lending, when money supply contracts, then interest rates naturally go up, and you don't want to be caught in that scenario. So you want to take preemptive measures early, so that you can protect your future income.
All right, let's talk about what's happening on the equities front. Although losing marginally, equity losing somewhere in the region of almost a 4%, EABL 0.5%, we still see foreigners being the drivers of these blue chip counters. As I said, foreigners waning in terms of interest, but where they come through, it's the blue chips. And that seems to have been the state of play for much of 2011.
Yeah, foreigners have always participated in liquid shares simply because of the size of their positions. They want to be able to enter and exit with ease. That eliminates the smaller stocks, small caps. But even having said that, of course, there's also who want to hold a long position. But you've got to remember that next year we are having our elections. It's in August. We are close to maybe 15 months out to that, and perhaps they want to protect themselves. Again, I've mentioned that the government, economic policy is at crossroads. So some people are taking a wait and see attitude. I'm sure they're also worried about non-participation of locals. A lot of fund managers have moved to fixed income, where they can secure a return, because there's still a dark cloud hanging over the equities market at this point. So those are the dynamics, and everything is just falling on naturally.
Right. Obviously Safaricom, large market cap, dominant player on the market, but it's staying at about 390. The price is not really moving significantly above the 4 shilling mark. Now, a year earlier ago, we were talking about Safaricom reaching 5 shillings, for instance, as a psychological level. The situation has changed fundamentally, it seems.
I think the variable that has changed most, that people need to keep an eye on, is the discount rates the local investor would use. And with higher interest rates, obviously, then prices will need to come down just to match the rising yields in the market. And therefore, even if everything fundamentally remains the same, just the simple fact that interest rates are going up can lead to lower prices. And in fact, that's the one dynamic that we were most afraid of, and
Right.
it seems that it's materializing.
Okay, very briefly, asset allocation, because we do know most people would be going into government securities at this time of rising interest rates, but those who are brave enough to stay in equities, what should they be looking at?
Well, if you're going to stay in equities, you want to increase your investment horizon, because, of course, the yields are cyclical. I applaud the central bank's defense of the shilling. It was robust enough. Hopefully, inflation will be curbed, and you'll see a stabilization of the shilling. And that will give a floor to a firm ground to stand on for industrials as well.
Okay.
Because of their international supply chain problem. Interest rates rise should be good for banks.
Okay.
We know that they'll protect their portfolios by moving some of their bonds to hold to maturity.
All right, we have to leave it there, Johnson. We get this. We get the gist of it all. Thanks so much. Stay in industrials and move into banks.